jump over to the vol side of things. 10-day realized on BTC has stayed in the low 30s on the week. So you can see that yellow line kind of flatlining there. Implied vols have shifted lower though. Obviously focus shifting towards Ethereum with the Shanghai upgrade. That did spark a spot move higher and took realized vol up by about 6 points in Ethereum. But we didn't see any spike in realized vol in BTC. Now, implied vol got hit about 7 vols in the front in the 1 month on BTC. Ethereum vol held up better, only down 2 vols on the week, as obviously spot managed an 8.6% rally from this time last week. Positive carry remains in both assets. If we look at the amount of positive carry, it was in the kind of 90th percentile last week. It has come down, but it's still pretty healthy, around the 70th percentile in that 15 to 17 area in terms of vol points. And then the next major catalyst is likely to be the 3rd of May FOMC, where markets are going to expect this final 25 basis point hike. Is at 85% probability being priced that they're going to get that hike. But then really we're going to be looking for what sort of guidance we get from Powell on whether this market pricing is accurate or whether there is still another potential hike on the table in June, which the market isn't really calling for right now. Okay, then looking at term structure, we did see term structure collapse into contango, particularly in BTC, where we've seen a nice move down in the front end there. Ethereum also lower, but just not quite as dramatically. Obviously, this is the 1 week stuff, the stuff right at the front, but you can see the 1 month shifting down a lot more in Bitcoin than it is in Ethereum here. Okay. The BTC ETH vol spread. So ETH has shifted up, obviously. So that's back above 5 vols in the front. And in the back end is about 5 vols. Realized vols obviously spiked as well. So we've got the 30-day spread just shy of 5. We've got the 10-day realized spread just shy of 10. So those realized spreads are justifying the vol spread moving back up. And it's got back up to about 5 vols. If you look at the weeklies, it did spike to around 15. That's this little spike in the green line here. It did spike as high as 15 vols in the weekly options, but that was pretty short-lived. Now, because spot has rallied about 13% from the lows, it is looking in technical better shape, this ETH BTC spot spread. So the more positive momentum that ETH can build, the more supportive we think it's going to be for ETH volatility, implied volatility. It's still historically cheap, right? If you look at Ethereum implied vols, they're in the kind of 12 to 15 percentiles still going back a year and a half. So they're not looking expensive. So we wouldn't be surprised if ETH does start to continue with this outperformance for this vol spread to get back to 10 to 12 vols and ETH vol to continue to outperform, right? So that definitely is still my base case, provided ETH's move isn't just a flash in the pan and actually can build off this move that we've seen. Looking at SKEW, front end call SKEW, which had reached as high as 5 vols, was unable to hold in Bitcoin, even as we breached 30K and because we got faded. The whole curve now sits about 1 to 2 vol premium for calls in terms of SKEW. The back end is obviously less volatile, so that's just been sitting there around that 2 vol area for a while now. But the front end weeklies, that SKEW is very spot sensitive and basically wings around whichever way spot is going. Looking at Ethereum SKEW, it did flip aggressively to calls after the upgrade triggered that strong rally. Dealers were obviously caught a bit short gamma, particularly in April upside. So weekly SKEW got as high as 8 vols for calls, but it has stabilized since then. And now the whole curve looks pretty similar to Bitcoin and is trading 1 to 2 vols again for calls above puts across all maturities. And generally, ETH SKEW has been holding for puts all year. So this is really the first time we've seen it pop on the back of that strong performance and the price going through 2000. So far this year, owning call SKEW has been the right trade. Implied vols have performed much better on rallies due to the flows that keep coming in to chase these upside breaks as crypto markets prove to be more bullish than stock markets. We do think at some point the tide is going to turn, and we do think put SKEW might come back. But this requires a recoupling between stocks and crypto on the downside. Okay, so until we see, a week or two where stocks are getting beaten up, S&P's going back down towards the lows, 3,800 and beyond, and crypto's getting hit with it, we're not going to see that put SKEW catch a bid. So we need to see that correlation come back, and right now we're yet to see that. Okay, I'm not sure what the catalyst for that's going to be, but it may well be stickier inflation, higher for longer, that type of rates narrative, and the dollar catches a bid again. But look, so you need to look out for the kind of what's going on in the macro to get a feel for what's going to make those things connect again. All right, the individual dashboards, not a whole ton to say. Obviously, the strategy compass is looking as buy puts on everything, just because spot is high and vol is low, particularly on Ethereum. But I wouldn't be rushing to buy puts right now on Ethereum, to be honest, because now that the break has kind of happened, you want to kind of let's see how far this thing wants to run. Looking at flows, we did see a decent amount of option flows this week, just shy of $5 billion notional on BTC as we broke 30K. A large protection trade went up before CPI last week, middle of last week, the 28th of April, 28K, 34K risk reversal. That's highlighted here in these purple bars, that there and there. And we also saw a seller of some call spreads in May, 26th of May, the 30K, 40K call spread in a decent chunk as well. There was also general buying interest in April call spreads, 32, 36, and May, 5th of May and 26th of May outright calls. So just a general decent amount of upside interest still on BTC, even though it's kind of running out a bit of momentum. You can see all of these bars here are all calls, and still very few bars on the put side of things. On the put side of things, we did see 26K puts get sold in April, and 30th of June put flies getting bought as well. All right, moving over to Ethereum's flow picking up to about $3 billion notional as well. One of the better weeks of the year in terms of option volumes for ETH, understandably. Obviously, the large upside trades that went up was this 2,400, 2,700 call spread in 30,000 options. So a big clip there. We also saw these big pink bars, which are profit takes generally of April calls that had been accumulated ahead of the Shanghai upgrade. So in the 2,000 to 2,200 strike zone, these calls getting sold back to the market. And also someone did buy a chunk of 1,900 puts as well. So basically saying, all right, we had the move now. So, the move's done. Well, we're going to fade this now, basically, right? So, someone thinking that maybe ETH does just give back this spike. And then we did see some rolling of calls as well in April, rolling up to higher strikes, and then also rolling out to May as well. So those are the type of flows we generally saw. But again, very much dominated on the call side, I would say, which has been the theme all year, really. Okay, looking at gamma positioning. So dealer gamma positioning in Bitcoin has been oscillating around zero. So I wouldn't say it hasn't deviated too much. It did spike up into a bit of positive, back down to negative, but I wouldn't say that deviation from zero is too significant to really read too much into. From the current positioning setup, we do see above 32K. The dealers might get short again. We've got some 28th of April shorts there. We've got some May shorts there as well. So both Vega and Gamma, the street could get short if we were to breach 32K. But for now, looking at the price action, seems reasonably difficult to achieve. Looking at Ethereum's positioning, we had flagged that was much more fragile on the upside because of all those April call buyers that came in for the event. And we did see a big spike down in positioning here on Ethereum. But then as those sellers of calls came back, the positioning bounced, normalized to something a bit closer to home. Looking at where things are now, though, it's fairly neutral because you've got this local strike on the 21st of April that dealers look like they're long versus short the wings on the 28th of April. But right here, right now, that looks like a fairly gamma neutral position. But after Friday, if this long position in 21st of April isn't replenished, then the dealers are going to get left short gamma again. But I suspect there will be systematic flows that come in that will supply dealers with that gamma back at the end of the week. So I'd expect ETH positioning to stay fairly neutral into the weekend, right? But we'll keep an eye on it. Okay. And then what have I been up to? All right, cool. That's it for today. Thanks a lot for listening, and I'll catch you all next week. Cheers.